Last Friday, the highly anticipated U.S. non-farm payroll data was released, and it's out now. The results beat market expectations. Originally, the market expected May's non-farm payroll increase to be around 130,000. That was a forecast, but the actual number came in at 139,000 jobs, higher than expected. This signals the U.S. economy remains resilient. In the long run, that's positive for U.S. equities, and indeed, the three major indexes didn't disappoint. They opened sharply higher in response. The Dow Jones in particular showed signs of a breakout. It was testing a strong resistance zone recently, and now from the chart we can see the Dow has slightly broken through the upper range. It touches the recent resistance high, though it hasn't clearly broken out or held above that level. This move still hints at upward momentum, and going forward it could send a positive signal to the market that an upward move may follow. Compared to the Nasdaq, the S&P 500 looks much clearer. It has clearly broken out of its recent range. The index made a solid breakout above the recent consolidation, and it held at that level well. It even posted a new high since the April rebound. It's now just one step away from retesting the previous high, very close to that resistance. The key now is whether it can break through and potentially set a new all-time high. That's what investors are watching for. Especially at this level, we're seeing signs of strong bullish intent. Momentum clearly favors the upside. Even though volume hasn't picked up significantly, we can still feel the breakout above this range is meaningful. So the likelihood of continued upside remains high. On top of that, over the weekend, China and the US leaders reached a consensus by phone. They agreed to push forward trade talks, so the trade war may start to ease. It could de-escalate. It sends another positive signal, and that signal greatly helped ease tariff tensions. It helped break the deadlock. These two factors combined are very constructive for the market, and globally speaking, this also boosted sentiment worldwide. But US stocks saw the most direct impact. As a result, the S&P 500 launched an upward move here and clearly held above the breakout range. This shows that its short-term momentum remains strong. It still has the potential to challenge its previous highs. Of course, what we hope to see now is a new all-time high because if that happens, it would carry significant weight. It could trigger a strong emotional rally in the market. A historical breakout like that means a lot more. It would make market sentiment even more bullish. And that key point, a record high breakout could spark lasting optimism in the market. Of course, even with bullish news, there are always risks. Negative catalysts still exist. So, what are they? Well, in the US market, unexpected events tend to happen without warning. Just this weekend, there are immigration enforcement actions in multiple US cities targeting undocumented migrants. They triggered large-scale street confrontations, chaos, and even clashes. Right now, the situation could escalate tensions further, and that's causing serious concern in the market. So, how should we view this? If this really turns into a negative factor dragging down the market, then we can only treat this event as a kind of test. Let the market show us how it reacts. If it's truly bearish and the market opens lower and continues falling, that would show the market takes it seriously. It would be a real concern. In that case, we should know the bullish momentum may be fading and a pullback may follow. But if the market shrugs it off, if the event has little impact, and all three major US indexes rise on Monday, then it means the market remains strong despite the noise. In that case, the S&P 500 and the Nasdaq and the Dow all could continue trending up. Especially the S&P 500, which could keep pushing higher, getting closer to its previous peak. What we fear the most is this: if the market reacts strongly to this event with serious concern, and that leads to a reversal downward. The worst case scenario, exactly what we're worried about, a sharp pullback and market turning south. Worse still, if we see a clear top formation on the chart, that could be a short-term topping signal. And for the bulls, that momentum could take a serious hit. So we need to be aware of the worst possible outcome. Even if unlikely, we have to stay alert. Right now, sentiment is bullish, but it's mixed with negative headlines. Bearish news still lingers. That's part of the setup. So which way will the market choose? Only the market can reveal that. We must wait and see, then make our call. Don't try to overpredict. If we do, we may fall into bias and assumptions, prejudging too early. So instead, it's better to let the market speak for itself, because market reaction is the most accurate. The market is always right. Let's try to predict what the worst scenario might be. As long as that doesn't happen, the rest is manageable. So what's the worst outcome? It's if the market truly sees the immigration conflict as a serious trigger. If the unrest escalates, the situation spreads, and it threatens U.S. domestic stability, causing an economic shock, then the S&P 500 could decline. A bearish candle might appear on the chart. At that point, we may see a structure of three candles forming a clear top reversal. Zooming in a bit, you will see a clear top pattern. At that point, it could signal a market top. That would put pressure on the market and weigh on bullish sentiment. So you see, this is the worst case scenario. As long as it doesn't happen, as long as there's no top signal like that, we will remain bullish. We will stay long. As long as we don't see a clear three candle top reversal, that kind of setup, we will keep our bullish view. So as long as the worst doesn't happen, that itself is a positive sign. It's a good thing. It's not just the S&P 500. The Dow Jones is facing a similar setup. It's also in a comparable situation. There was a slight upward move recently, but if it fails to form a lower shadow here, if there's no strong support and instead we see a downward candle, that would be a classic top pattern. And the signal it sends to the market, a likely pullback ahead. A pullback is possible, and at this level, a pullback would make sense. Why? Because this is clearly a strong resistance zone. So if the market drops here and gives a signal, it could trigger a wave of bearish sentiment at this level. That kind of sentiment and those positions could lead to a sharp sell-off. So what matters most right now is how the market reacts. It's all about the reaction. Because recently the market is facing a mix of bullish and bearish news. It's a complicated backdrop, no clear direction yet, so we will have to wait for the market to decide. If it ignores the negative news and even small positives can trigger strong upside momentum, then today's action shows the market is still strong and we will maintain our bullish view. As long as the worst case scenario doesn't play out, we will continue to believe the trend remains upward, still bullish. At this point, let's take a look at Google, one of the big seven tech stocks. On Friday, after the non-farm payroll report came out, the big techs performed strongly. They were quite impressive overall. Take Google, for example. It surged on Friday on the back of bullish sentiment. Its gains was quite significant, up about 3%. For a mega cap stock, that's notable. A 3% gain is already impressive. Now let's take a quick look at the chart. Here's a simple analysis for reference. Right now, Google's price is in a tricky spot. There is some resistance just above. It's encountering a pressure zone, a minor one, but the resistance isn't very strong. Looking at the daily chart, this level is showing some short-term resistance. So what's the likely path from here? Chances are it will break through this resistance zone. It's very likely, high probability. A breakout is likely, even though there is some pressure now, it's not significant. So the chance of an upward move is strong. Looking at the weekly time frame, you will see the momentum more clearly. On the weekly chart at this level, Google has formed a clear upward swing, a clear bullish move. You can see the MACD is forming a golden cross here, right around this area. Bearish momentum has mostly faded. The bearish pressure is almost gone, and bullish momentum is building step by step. Another golden cross has formed. The overall trend is up. And if you look at trading volume, you will notice volume is increasing moderately compared to earlier levels. It's steadily rising. So this uptrend is supported by volume. The odds of continued gains are high, and this move is part of a broader uptrend. So while the daily chart shows resistance, on the weekly chart we follow the bigger picture. Short-term moves may face resistance, but the broader trend is still clearly upward. For short-term traders, this level has a high probability of breaking out, especially here. A clear pattern has formed. From a chain theory perspective, this area has developed into a central zone. We can say this is a bullish consolidation. After this upward leg completed, a clear bottom pattern formed here. It's a nested bottom reversal setup. A bottom formation. Through inclusion handling, a new keyline structure was generated, and in this section, the high and low of the middle candle are both lower than the adjacent candles, which confirms that an upward leg has already started. The upward momentum is underway. Right now, what do we see? There's no top pattern formed, no top reversal yet. So this upward leg isn't over. Here, if we look at three candles after applying inclusion handling, you will see clearly there's still no sign of a top reversal forming. So that means this upward trend is not finished and may continue. There is still room for further extension. This is highly probable. So right now to the upside, especially from the weekly chart, the bullish probability is quite clear. Therefore, the uptrend is likely to continue. So how far can this uptrend go? Looking at the weekly chart, Google could challenge its previous high. That level is around 206. And compared to other G7 tech giants, Google has some clear advantages. It stands out among the group. Why is that? Because in the AI boom, Google has formed its breakthrough. In this sector, it has found a monetization path. Especially during the Input-Output conference, Google showcased a real innovation. It amazed many consumer-facing consumers. They were impressed by the upgrades in model capabilities and the new AI-driven search. These efforts deepened Google's commitment to helping users apply AI effectively. In the AI wave, Google will clearly secure a powerful position in the space. In this long-term trend, Google is riding the wave, and right now it's drawing major attention. There is strong bullish support behind it, and technically on the weekly chart, it's trending clearly upward. As long as no top pattern appears and there's no sign of peak, the uptrend should continue. Until a reversal signal shows up, we expect it to keep moving higher. That momentum could bring it back to challenge its previous high. Of course, we can't guarantee it will reach that exact level, but the odds of testing that high are strong. Even if it doesn't hit 206 again, a move to around 187 is very achievable. That level is well within reach. This region here, the 187 level, is fully achievable. So within the next 2 weeks, reaching that price level is highly likely. As long as the market cooperates and we don't see major negative news that could drag down the broader market or individual stocks, as long as market sentiment doesn't turn too negative or fearful, too pessimistic or overly fearful, then for Google, a continued push toward previous highs is very possible. In fact, reaching 187 could be quite easy. On the weekly chart, it's clear the uptrend is still intact. It's not over yet. There's still a volume support, so we can confidently see 187 is a very reasonable target. Alright, that's all for today. A quick analysis of the US stock market. If you have any thoughts or insights, feel free to share with us. Leave a comment down below.